The stock market is making people nervous right now. They see bank after banks are failing, interest rates keep getting hiked, and inflation is still around after a year and a half of trying to get it to go down. And so people look at the market and things have been selling off pretty aggressively. We've had some up days, we've had some down days, and it seems like on any given day we're waiting for one big news story to push the market up or down. And the savior, again, is Apple. Apple is a stock that, if you look at the overall markets, it is the most influential stock there is out there, and this is the second time in the past year and a half where Apple has come out and really saved the day when you look at the overall market as a whole. Today I wanted to go over why Apple is so important, and if you only had to follow one stock in the overall market to see the overall health of the stock market, it's to look at Apple. We're going to talk about its entire history, how it has performed, why it is so influential, and even though it's not a large dividend stock, it is a influential part of my overall dividend investing portfolio. So let's get right into it. So Apple has been a publicly traded company since December of 1980 when it opened up at a price of $22. Since that point, they've gone through 5 stock splits where the price has gotten too high and they have artificially lowered the price, meaning that if you looked at what the stock prices is now versus the IPO price, that would mean that it would IPO at 10 cents. And it's currently at $173.57 at the time of recording this on May 7th. So that is an incredible return over the past, 43 years? I'll put up on the screen right now how it's done every year since it's IPO'd, and the things that are absolutely insane to look at is the fact that it's had 7 different years with over 100% returns, and I think there's a couple of 200% in there as well. And now in 2023, it is the largest publicly traded company with a market cap of $2.75 trillion. I remember when it hit 1 trillion and that was a big deal, and now just a couple years later, $2.75 trillion. So why do we even care about market cap at this point? It seems like an artificial number that's very dependent on stock price and history. The importance is that it decides the weighting of stuff like the S&P 500, which is a weighting-based index, meaning that the larger a stock is, the higher weighting it's going to be. You have 505 stocks, if you want to be technical about it, in the S&P 500, but they're not all evenly weighted the same. You don't have Apple being the same amount as Nike because they're different sizes. So the weightings mean that Apple is a much larger proportion of the S&P 500 than something like a Nike is just because of its size. So at this point, Apple makes up 7.26% of the S&P 500, and when you add that together with Microsoft, which are the 2 top dogs when it comes to market cap, it makes up around 14% of the S&P 500. So pretty much, 14% out of the 505 stocks is made out of just 2 companies, which is just crazy to see. And it's the largest proportion that the largest 2 weightings of a company have ever been in the S&P 500. So Apple is a giant stock. We've talked about that, and we've talked about its incredible performance over the 43 years that it's been a publicly traded company. So why is it so influential, and why did it save the stock market for a second time in the past 18 months? The easiest way to think about it is people view Apple as a sign of the overall economy. They see a lot of worrying trends, whether it be banks, whether it be microchip problems, pretty much anything that could happen in the economy, but they're kind of waiting to see what the big dogs with Apple, Microsoft, and Amazon are going to say about the trends in the economy. Because if things are looking really tough and Apple posts a blowout earnings quarter, they're probably going to be pretty relaxed about it. And there have been a couple times recently that we've really seen this on effect. One of the times that we saw that was back in early 2022 when a lot of tech stocks were hovering around 52-week lows. You have worries about microchip shortages that have been going on since the beginning of the pandemic. And people are really worried that we're going to start going into a tailspin about the economy. This is right when inflation is starting to really kick butt. Ukraine situation, you have a lot of negativity going around the overall market. Then Apple comes out and posts a blowout quarter, and people kind of relax a little bit because things are probably better than they seem. And now most recently, last week, we saw a lot of negativity with another bank, with First Republic Bank going under. You have a lot of worries. People are saying that more money has been lost from the bank failures compared to 2008. And that really puts it into perspective how quiet of a bank failure trend this has been, because it's been talked about, but people aren't panicking as much as you might have previously thought. But Apple comes out and tells people, don't you worry. When in a time where banks are potentially failing, Apple comes out with a high yield savings account with a 4.15% APY, which is much higher than pretty much any bank out there is offering, including just how large it is overall. They've got their Apple credit card that goes along with this, and they are just raking in money. And so last week they posted better than expected earnings, and the stock price skyrocketed pretty significantly, and that pulled the rest of the market up, especially on Friday when we saw one of the best days that we've seen for the market in 2023. So they posted better than expected numbers based off of their iPhone sales, which have been the key metric when you look at Apple as a whole. They have all of their other sectors, but iPhones are really the key there. And they increased their dividend, which is a sign of confidence. They've been posting this dividend since the Great Recession. And so it's not a dividend aristocrat, meaning that it has not increased its dividend payout for the past 25 years. But when you look at it, it's pretty significant. An increase in their dividend, especially in a time where people are pretty worried, is a good sign of confidence overall. But the thing that really skyrocketed the stock is the stock buyback program. For those of you who don't know, a stock buyback program is basically you have cash sitting on the side, and there are a couple things you can do with it. You can invest it back into the business with research and development. You can hold on to it with cash on hand, which just makes you more stable if you have some tough economic times. Or you can use a stock buyback program, which is the idea of you buying outstanding shares and then you kind of get rid of those shares. So now every share is worth more, because you're getting rid of some of the outstanding shares. So everyone's valuation goes up, so it artificially inflates the stock price. But just beyond that, it just shows the overall confidence in the company because you're buying back your shares at an elevated price compared to what we've seen back in the past 52 weeks. So this was $90 billion worth of stock buybacks. And if you look in the past 10 years, Apple has bought $596 billion in stock buybacks, which is more than the market cap of 493 of the 500 companies in the S&P 500, which is just crazy to think about. They have so much cash coming in that they've spent more on stock buybacks than the valuation of 493 of the companies. So how can they afford this? The big thing is that Apple has always been flush with cash. I'll put this graphic up right now that shows their cash on hand, how it's varied quarter to quarter. And you can see that when the pandemic really started taking off, they were holding on to a lot of cash. And it got to the point where they had $204 billion in cash on hand, and people were saying, please spend that money. They don't like seeing all this money on the sideline, but it made them more confident in wearing and surviving the unknown when the pandemic first started. And so you have all this money sitting around, and now that they're putting this money to use, we're seeing a lot of positives and a lot of confidence in the overall market as Apple comes out and says, we're pretty comfortable. We don't see as bad economic times as you potentially could have thought. And we're gonna throw some of this cash on hand that we've just been sitting on back into our stock to help our shareholders and push up our price. So since I am a dividend channel now, let's talk about that dividend. And it's not super exciting when you see it. It has a dividend yield of 0.53%, but it's only been paying out the dividend since 2012. I mentioned that they paused their dividend, or they didn't have their dividend payments until after the previous recession. But since that point, they've raised their dividend payments at a compound annual growth rate of 9.5%, which is really solid. And when you put up this graphic right here, it shows a couple things. It's a little bit of a busy graph, so let's talk about it. The top one is going to show the stock price, and you can see that that stock price has gone up pretty significantly during that time. The middle one is the dividend payout, which is in a dollar amount, not a percentage. So it's gone up pretty steadily, and that's why we've seen the dividend payment increase since 2012. And then the bottom one is a dividend yield, which is the ratio of the dividend payment in dollars over the stock price. And as the stock price has really outpaced the dividends, it means that the yield is pretty low at 0.53%. So while it's a low dividend paying stock, the returns have made it so attractive overall. This is how the company has done versus the S&P 500 since January 3rd of 2012. I just put in 2012 because that's when they started paying out the dividend. And it's a pretty significant outperformance of 26% versus 13% during that time. So while it's not a high paying dividend stock, its performance has made it a cornerstone of pretty much any investing portfolio you could possibly see out there. And every time the stock price has dipped, I've bought more and more. And this past week, Apple coming out and saying they feel much better about the overall economy than people previously thought makes me feel really good about the next 12 to 18 months of the overall market, and makes me feel like maybe we're coming out of these tough economic times. Every time the market has kind of freaked out and thought that things were going to continue to get worse, Apple has kind of come out and saved the overall market, because the stock market is just a representation of how people feel about the current economy and market conditions. And Apple continues to come out and post blowout quarters, raise their dividend, and have incredibly large stock buyback programs. So let me know what you think about Apple as a whole, if you thought this news is enough to make you feel like the tough times are over in the overall market and we're going to continue to push higher, or what you think the market is going to do in the future. Also, let me know if Apple is a stock that you have in your portfolio, and let me know what weighting you have in it. Is it larger than the overall weighting in the S&P 500 of 7.whatever%? Let me know in the comments down below. My name is Andy. If you made it this far, please hit that like and subscribe button. We're trying to reach 10,000 subscribers, and I'll see you in the next video. Thank you for watching.